While Bitcoin was having one of the worst weeks of 2026, one tiny corner of the crypto market was partying like it was 2021.
Hey everyone, welcome back. Here is the headline. Bitcoin crashed below $61,000 this week. The total crypto market lost $2 trillion from its peak. Ethereum dropped over 10% in a week. Liquidations wiped out nearly $2 billion in a single day. And right in the middle of that carnage, a token called Hype hit a brand new all-time high. Not a bounce, not a dead cat rally, a new all-time high. At the same moment that institutional money was fleeing Bitcoin ETFs by the billions, a fresh set of ETFs, built around something most people have never heard of, pulled in nearly $160 million in inflows. Today, we are going to cover both sides of this story. We are going to understand the Bitcoin crash, why it happened, and what it means. And then we are going to dig deep into Hyperliquid, what it actually is, why Hype is defying gravity, and whether the wave of new ETFs around it is a genuine opportunity or the next crypto hype cycle playing out in real time. Let's go. Let's set the table first, because the broader market context here is important. It is June 2026. The crypto bull run that peaked in October of last year, when Bitcoin hit $128,000, has given way to one of the sharpest, most sustained corrections we've seen since 2022. Right now, Bitcoin is sitting roughly 50% below that all-time high. Ethereum has lost 60% of its peak value. Solana is off more than 50%. The total crypto market capitalization fell to around $2.18 trillion, roughly half of the $4.2 trillion peak from 2025. That is approximately $2 trillion in value, gone from the market. This past week was particularly brutal. Bitcoin dropped over 12% on the week. At one point during the week, it touched $61,300, briefly approaching the psychological floor of $60,000, which has been the key support level all year. Ethereum dropped more than 11% on the week alone. Total crypto liquidations in a 24-hour period hit $1.78 billion, mostly leveraged long traders who got caught on the wrong side of the move. So the context is the market is in pain, real pain, and it has been for months. But here is what makes this moment genuinely fascinating. While all of that was happening, while Bitcoin ETFs were hemorrhaging billions, a completely different set of crypto ETFs just launched, and investors flooded in. Something new is happening, and it is worth understanding. Before we get to the hype story, let's make sure we understand why Bitcoin had such a dismal week, because the causes matter, and some of them directly connect to the shift we're seeing in crypto investor behavior. 5 things hit Bitcoin simultaneously this week. Think of them as 5 arrows fired from different directions, all landing at once.
Strategy, formerly MicroStrategy, the largest corporate Bitcoin holder on Earth, disclosed in an SEC filing that it sold 32 Bitcoin between May 26th and May 31st. The sale generated about $2.5 million. Against a treasury of over 843,000 Bitcoin, this is mathematically irrelevant. But Michael Saylor had built an entire brand on never selling. That doctrine cracked, and when the market's most famous Bitcoin bull sells, even 32 coins, it rattles confidence. Whale data confirmed what followed. Holders with between 10 and 10,000 Bitcoin unloaded nearly 25,000 BTC in the days after. US spot Bitcoin ETFs recorded 13 consecutive days of net outflows, the longest streak on record. The total? $4.4 billion pulled out. On a single day, June 1st, $484 million in redemptions hit, with BlackRock's IBIT alone seeing over $440 million leave. These aren't paper moves. ETF redemptions require selling actual Bitcoin. Sustained outflows mean continuous forced selling. On June 2nd, the bankrupt Mt. Gox estate moved 10,422 Bitcoin, about $739 million, to a new wallet.
But while Bitcoin was getting crushed by ETF outflows, liquidations, empty Gox fears, and macro pressure, another crypto asset was quietly hitting all-time highs. In the next video, we'll explore Hyperliquid and why Wall Street suddenly can't stop talking about it.